What is the simplest algorithmic trading strategy? You know, when it comes to algorithmic trading, many people think it's all about complex math and coding. But honestly, one of the simplest strategies you can start with is the moving average crossover strategy. It's not only beginner-friendly, but it's also a great way to get a feel for how algorithmic trading works without overcomplicating things. So, let me walk you through this in a way that makes sense, even if you're just starting out. First, let's talk about algorithmic trading itself. At its core, it's about using a computer program to execute trades automatically. Instead of you sitting there all day watching charts and making emotional decisions, the program sticks to predefined rules, and that's where the magic happens. Now, you might wonder why simplicity even matters. I'll tell you, when you're just starting out, a simple strategy helps you focus on learning without being overwhelmed. If you jump into complex systems too early, you're setting yourself up for frustration. Trust me, keeping it simple works. Here's where it gets interesting. The moving average crossover strategy is one of the easiest to understand. Imagine you're tracking the average price of an asset over a certain number of days. That's what we call a moving average. You can calculate it over 10 days, 50 days, or whatever period you choose. Now, when the shorter moving average, like the 10-day, crosses above the longer one, say the 50-day, it's a signal to buy. And when it crosses below, it's a signal to sell. Simple, right? Let me give you an example. Say you're trading a stock. If the 10-day moving average moves above the 50-day moving average, it's like a green light saying, hey, this might be a good time to buy. On the flip side, when the 10-day moves back below the 50-day, it's your cue to sell. This basic rule can be applied to all kinds of markets, stocks, crypto, forex, you name it. If you're curious about how to get started, it's pretty straightforward. First, pick the time frame that works best for you. If you're just starting, daily charts are a good option since they give you fewer signals to work with and help you avoid the noise of shorter time frames. Then, decide on the periods for your moving averages. For example, a 10-day and 50-day combination is a classic choice. Once you've set that up, the buy and sell signals are super easy to understand. If the short-term moving average crosses above the long-term one, you buy. If it crosses below, you sell. That's it, no complicated analysis or dozens of indicators. Now, why should you even bother with this strategy? First off, it's simple. You don't need to be a coding genius or a math wizard to pull it off. Plus, it keeps emotions out of your trading. When you've got clear rules, you don't have to second-guess yourself. And believe me, avoiding emotional decisions can save you a lot of headaches. But let me be real with you, it's not perfect. This strategy can throw out false signals, especially in sideways markets where prices are just bouncing around. And if the market's super volatile, you might find yourself making trades too often, which can add up in transaction costs. That said, for a beginner, it's still one of the best ways to learn the ropes. If you're thinking about optimizing it, here's what I'd suggest. Always backtest your strategy. That means testing it on historical data to see how it would have performed. It's like practicing before jumping into a real match. You'll get a sense of what works and what doesn't. And don't be afraid to tweak the moving average periods depending on the market. Some combinations work better for certain assets, so experiment a little. Speaking of tools, there are plenty of platforms out there that make it easy to set this up. If you're just starting, TradingView is a great option with its simple interface. If you're ready to dive deeper, tools like Python and Quant Connect can help you automate things further. Once you're comfortable with the basics, you can gradually move on to more advanced strategies. Maybe you'll start adding more indicators like Bollinger Bands or RSI, or even venture into machine learning and AI. But take it one step at a time. It's better to master the fundamentals than to rush into complex systems and get overwhelmed. In the end, the moving average crossover strategy is a great entry point into the world of algorithmic trading. It's simple, effective, and gives you the confidence to start building your skills. Remember, trading is a journey, and starting small is the best way to go. Thanks for watching.